So I'll get right to the stock of the day. Now, a bit of Friday vibes around here. I did ask earlier this morning on air what you'd like us to see covered for the stock of the day. I said you could tweet to me. I also got some emails as well. And so I thought it was pretty tough to pick between these two stocks, so I figured we'll just do them both. First up, Macquarie, posting a 56% jump in annual profit, benefiting from commodity price volatility. Earnings from the capital are more than tripled to $2.4 billion. So why don't we start with Macquarie? Because it's surprising, I think. I know it's a bad day out there, but to see the company down by 6% at one stage of the game, 8% now. Jun Bei Liu, was it the caution that the company expressed about the overall economic outlook? Does it warrant an 8% fall?
It doesn't warrant 8% fall. What's happening is, aside from all the other stocks that's being sold off in that sector at the moment, it's really about Macquarie trying to guide cautiously. That's what they always do. So they have just posted an incredible result on the back of some of unexpected event, things like energy crisis and commodity trading has been incredibly strong. So they just want to start a year with a reasonable expectation so that they can beat in the next 12 months. So the guidance was saying, look, the first half next year is going to be lower. And clearly last year was incredibly strong, and then the year before was incredibly strong. But this is what they always say at the beginning, when they delivered the full year results. Remember last year they have an incredible amount of upgrades, and it was also same as following a somber start to the new year. So look, nothing to be worried about. I think it's an incredible company. Investing in Macquarie is not about buying for the next result. It's about invest for the next 5-10 years. Amount of investment they have put into all that renewables, all these assets that really have, the future-proof their asset pool instead of just traditional banks where you just generate margin in lending and turning. So it's an incredible business. Today was just really a shareholder just saying, oh, look, there will be consensus downgrade.
So is there a buying opportunity in it today? Currently at 186. I mean, when it's under 200, I've heard plenty of times, buy.
Yeah, it's absolutely a buy.
Adam, do you see things any differently? Because, look, perhaps you can get it cheaper.
Well, I mean, that's always the case. You can get it at a zero, maybe one day or two, but it will never happen that way. That's very tongue-in-cheek, everybody. Look, Jun Bei, I would really hope that the market would actually be aware of what Macquarie does on a regular basis. We all know that they always come out.
Well, that's my point too.
Then, and now you get this big hit.
Under promise, over deliver.
Yeah, and they always do that, and it's a buy from me, everybody. I absolutely, I think it's a fantastic business, and I'm really, really comfortable with it. I just feel that the market's overreacting, and obviously with the US, it's just exaggerated that fall. Maybe they would have only done a sort of a 2% fall, but it's down. What did you say? 8%.
8%.
So
I mean, you don't see Macquarie Group down 8% very often.
It's a big fall. But if you look at some of the numbers, I think it's absolutely, their common tier equity is at 11.5%. I think that's fantastic. Their ROE is now back up to 18. I mean, that's getting close to really sort of real fantastic businesses. And they've got surplus capital of $10.7 billion, up from $8.8 billion the year before. So times have been good. We always knew that the commodities were going to do well. Potentially a little bit of cooling coming into this one, like Amcor the other day. Like it's already, rallied so hard, and there's people just taking a bit of profit. But I think it's a buy. Anything under 200, I'm really comfortable with.
Okay, so that is a buy. So there is no hint with either of you that the best days for Macquarie are over, or
not at all. Not at all.
Yeah.
They
know
always
what they're
doing. Exactly, and they invest for the much longer term, and you don't buy it for the next result.
Yeah. So we've already got a double buy today. Let's get to Atomos, because of course it's on the smaller end of the index, but a lot of our viewers have been following this company very closely for a couple of years. It did confirm guidance for FY23 and 24, but warning that sales have slipped so far this year. So it's out with the trading update. Pretty much it was a profit warning. So what do our experts think? Adam Dawes.
So why did you pick me first?
Because,
anyway,
because on the 8th of April you had a buy on Atomos, and I know it's the house view at Shaw Partners. Look, you're not alone.
No,
so
I know.
There's nothing in it. But I mean, how does a shock? I mean, obviously it's a shock downgrade when you've got the share price down by 40%. What's up?
look, obviously, profit downgrade in this environment, and this is a growth company, and if you disappoint the market in any sense of the word, it will be very, very harsh on this one. The stock's obviously continuing to fall. 36 cents. I think it had a low of 30 today. So it's certainly one of those ones that has been hit hard. Obviously, earnings forecast and significant downgrade to sales has been the big thing. They're talking about marketing and how they're having to spend. And you were saying something about the MD leaving or something like that as well?
Well, it was recently there was a change in CEO at Atomos. So is this now, repeatedly indications of something's going on there?
Correct.
Yeah.
Correct. Something.
So do you sell now?
From a board level, I think that there is definitely something going on. And if you see the MD leaving with no real succession plan going forward, then you know that there's something happening, and then potentially today is obviously a clear indication that there's something going on. Do you sell today? Look, this is a great little business and has done very well because it does take advantage of a lot of technology that people have from their iPhones and everything else. Like it's a great technology. It's a hold.
I guess you're going to wear the pain
I'm gonna
now.
wear the pain. Well, yeah. What can you do down here? I mean, unless Jun Bei is probably going to disagree.
Well,
but,
unless you have unless
no,
you've really
fundamentally,
changed your view.
no, I think the skeletons in the closet. I don't think they're all out yet. Okay, so we've seen one profit downgrade. We've seen a management change. There's probably another downgrade to come along here, and then that's probably the time to buy. But I think if you've got some, I think you'd be okay to hold because the technology is there, and tech has been getting absolutely.
Yeah, the market is in no mood to tolerate any sort of bad news.
And the reason why tech's getting belted is because everyone was willing to pay 100 times for these businesses. Now they're only willing to pay 30 times for these businesses, and the value is now coming back down. So potentially at 30 cents, somewhere around there's some value in some of these things, but I don't know when the bleeding stops. So I'm going to say hold.
It's interesting. So in this trading update, it's got a lot of detail about a response to its new products. And it's saying that after considering feedback at NAB, which is a big tech conference, saying the company intends via promotional activity and discounting to rapidly increase its installed base of cloud-enabled products to further optimize take-up of its new cloud services. But it will have that short-term earnings impact. Confirming, and it should say, annual recurring revenue guidance for FY23 and 2024. So it's tough, isn't it? It's coming out, it's acknowledging all these issues. It's not been selling is the basic takeaway, though.
Well, that's exactly what they're saying. I'm sorry, we can't sell enough products, so we have to discount and sell them.
Yeah.
Look, for a share price to be down more than 40%, it's angry selling. It's not really reflecting of the fundamental or anything else. Someone just lost faith, or a group of investors lost faith, just want to sell it. Now, I don't blame them because if you look at what's been happening, so they had previously had a CEO and he left, and then they appointed a new one, and then she only just stayed for a very short while, and then she left a few weeks ago, and then at the time, board reaffirmed the guidance, and then now, just a few weeks later, and then they changed the guidance. So, it's very difficult for external, minority investor really to work out what's happening. Why has things changed so quickly, and why did she really leave? And whether there's anything in the closet. I think so at this point, I feel this stock is either a buy or sell. So, the question is how easier to pull the sell trigger because, just because we don't know, we can't lift all these, the lid to see really what's there because we're outside the business. And like Adam said, there could be another downgrade or maybe the company's not on top of it. So we need to know more, and that is, company need to give more explanation, more transparency and clarity of really what happened rather than we can't sell enough products. Sale can't have just dropped in the last couple of weeks.
No, but you said it's either a buy or a sell. So let's just put the question out there. Would you be buying this to put into your portfolio?
I would be selling it today.
Yeah. So you would sell if you were a holder because the bad news might not be over.
That's right, and it's too unclear to really work out what's happening.